What's up, boys and girls? Old Uncle Toot back with you once again. So, put some feelers out there on Twitter. Said, hey, I'm feeling like doing a macro markets perspective. What do you think? And you guys responded. So, I'm going to get to it right now. But Toot, you're on the S&P chart 1 hour. Yeah, let's go ahead and talk about this real quick, and we'll just work our way out. Zoom out from here. Just want you to know that everything we talked about in the last however many videos, because it's been tracking quite well, is right on track. So no matter what you hear me say in this video, I still have quite a bit more downside to go in this current move. However, you should see that the largest visible labeling shows a zigzag to the downside. That means a corrective move to the downside, which means when that ends, something else, equal or greater happens, right? Okay, well, let's go ahead and get out here to the 6 hour. That zigzag, ABC zigzag, is the final actionary leg in a larger multiple zigzag to be exact, WXYXZ. Been over and over this. It's not a super common pattern, but sort of playing out, right? What I don't usually, I've talked about, but I don't put on the chart that you haven't seen, because I like to leave these things off so that I don't want to skew. I want you to think about what I want you to think about, basically. So there's a lot of times I leave things off that just aren't important to the message of the day. Let's put it that way. But usually I don't put it on here, and it's a 2 at the bottom of this, meaning giant green fucking arrow after, right? So when this finishes, giant green arrow. But again, more downside to go. But Toot, how's that work? Well, why don't we just go ahead and get over to the actual S&P 500 chart and zoom way out here. We'll get out here to the weekly. Let's get rid of the volume. I don't really need that. Oh yeah, I was prepping for this on my ultra wide screen. Let's go out 2 weeks. Okay, here we go. So yeah, I've seen your counts. I've seen a lot of counts, and I feel like this is like, people learn Elliottwave, and this is I'm not trying to disparage anybody that has this as their account, because I know a lot of really good analysts that do have this as their account, but I know a lot of novice analysts that have not what I'm about to say as their account, that this wave is actually over here, and the all-time 5 is in, and we're going to, the world's ending, right? Which is kind of what happened back here. But I say, not so fast. All right, so I have this as the all-time 2 wave of, the biggest 2 wave of all time at the current time. This started with the stock market bubble crash. All right, stock market bubble crash. Jeez Louise. This started with the tech crash back in 99, 2000, and then it rose all the way till the great financial crisis, which was the mega C wave of the flat. So, this is picture perfect textbook flat. Okay, with a C wave, that's exactly what you want to see. Flat, devastating. You should read the Elliottwave principle and read what they say about C waves. Okay, and in regard to scariest wave on the chart, it's funny that the great financial crisis, the second biggest financial problem of our time, is the second biggest thing on the chart, whereas the first, well, it's not even our time, but in our country's history, the United States, we'll say. I know I have some non-US folks, but the Great Depression, the start of the Great Depression, the stock market crash, was the all-time 1-2 before this 1-2. So it's only fitting and perfect for the theory that the biggest all-time, financial problems in the world, in the United States and as well, were the biggest 1-2s on the chart. And not to mention, it just works out count-wise. And of course, this is log scale. So I think most people use log scale incorrectly, but let's just say that they don't necessarily use it exactly right, and maybe I'm not, but that's just my opinion. And I think right now we're not skewing its importance at all. However, let's go ahead and take it out of log. For those of you that are like, well, you can count it this way and do that. Look at this. In real terms, look at what we've done. So, to not call this the all-time 1-2, what are you thinking? Look how big it is. Look how long it took. It was a decade. You know what I mean? So if you practice this theory, you should be thinking that this is all-time 1-2. And even if you don't, or even if maybe your idea is that this was the three. Let's just say maybe it was you have this as the all-time 1-2. Yes, 2. This was a 1-2, but then I had 3, 4, 5 here. So I'm still into the world. Okay, well, let's go ahead and look at that objectively. So whether we look at it in arithmetic or we look at it in log scale, this is just not clearly, even if you have it this way that I do, is that 5 ends here, 3, 3, 5, another flat. This market loves flats, especially with devastating C waves. Even if you have that as the count to basically make this as massive, not meaning that huge, but in the literal sense, massive as you can, to give it as much magnitude as you can, and really because it fits the best and you're not forcing something, right? It still doesn't work to make this a 1, 2, 3, 4, and then 5, because, you know, it might measure distance lengthwise. It probably does, in fact, almost perfectly, I bet. A little short, actually. This would be a little short for a 3-wave, but you get that nice expanding beat, so where you can say, oh, look at that, you hit the 1, 6, 1, 8. Okay. Usually on this scale, waves of the same relationship, they extend many times over 1, 6, 1, 8. So that would be incredibly short, in my opinion, on this chart, and we could go back and look at that, but we're not going to do that today. But however, the main thing you got to build, if you're going to build a count, you just build them, start them with channels. So this is debunking. So that this would be a 1, 2, 3, 4, 5. Okay, so we're going to say 3 ends here, 2 ends there. It's not even close. Remember, this is a temporary channel. This is a minimum price expectation. Minimum price expectation. Barely made the median. Just wicked it. Okay? So, no matter how you draw this, I find this to be by far the best count, personally. So, if that's the best count, and this is the all-time 1-2, well, we could have, you know, as we have seen, prone to this market, giant expanded Bs. Could be one of those. Could be a easily 1, 2, 3, 4, 5, and then 2, and then another 5-wave move here off of it. We won't get down to make some sort of crazy zigzag. Very possible. What I find to be more likely is that instead, that's 1, 2, and actually we have to bring, because I put that on, we'll put that up super millennium, and we'll put, this is not gonna fit millennium. Yeah, I hate these labels, man. Okay, so that'd be 1, 2. This was 1, 2. Just move down to primary, change the color. That's fine. And then now we've put in another 1, 2. So this is my count. I don't show you guys this much because then every Tom, Dick, and Harry, well, what about this? What about this? I've thought about it. If I didn't cover it here, trust me, I thought about it. Most likely. Feel free to show me, but I'm probably just not going to answer because, and if I don't answer you, it's because I already thought about it. And I find this to be the most probable. Completely objective, most probable. And if I'm wrong, it's the end of the world. Cool. All right, so anything you're thinking about in financial markets is pretty much up in smoke anyway at that point. So this is my overall macro perspective. So keeping that as my guide, I can come in here because I've seen, and you guys have asked me, and I've looked at and considered, well, dude, this move off the high certainly looks like could be an expanding diagonal. Yeah, it does. It could be. It really could be, but it's not. And I don't want to delve too deep into that. Maybe I will soon. Probably will soon. But let's just say that I like to say to members, because remember, normally when I'm looking at is trading degrees, right? Because we're talking about trading, you know, whether it's whatever degree you trade on, you know, I'm looking down in the 1 hour and less for my trades. And at that trading degree, I like to say, at any degree, I like to say, leading diagonals will beat you up and take your lunch money. Leading diagonals alone are considered very rare. Expanding leading diagonals, way more so. So, but two, you're saying it's a triple zigzag. That's a super rare pattern. Yeah, well, you're saying it's an extremely rare pattern. You know, apples to apples, you know, if I had to take one over the other, it's going to be the zigzag, especially with the context. So I'm looking at that, and I'm seeing that this is shaping up to be fairly similar magnitude waves, 3-wave moves, fitting what I'd like to see for a multiple zigzag. And we're coming down and projecting right into the high probability area for a wave 2. So we'll just say rough expectation. Move this. Then we're going to zoom back out and look at some other charts as well. So we're already headed to the high. This is my, you know, this is being, you know, trying to be unbiased. Of course, you form your biases by, you know, zooming out, showing you what I'm letting guide me. You have to have a bias, but you got to be ready to pivot off of that, right? So you're trying to be as agile and nimble as possible in your thinking, but you have to form an opinion. And you're trying to do that as objectively as possible, and I feel that I have. So this is where we're at with that. And in lieu of that, let's see if we can enforce this idea at all. So let's get out here, and we'll just look at the last year or so of price action on the 10-year Treasury note, and we'll just note yield. Yield should be important. It's the yield. And before we dive in on that chart, I just want to put up next to the S&P 100 and show you how it's typically inversely correlated, especially in this current condition of the last year and a half. Okay, so everywhere on this, just because I didn't want to junk up this chart, everywhere on this S&P chart on the left, where you see a red line, the 10-year yield was going down, and everywhere you see a green line, the 10-year yield was going up. So price was going up here, the yield was going down. S&P was going down here, the yield was going up. They went up together here. They, you know, S&P down here, yield up there, a little bit of uncertainty down here. And again, when this really ripped down, yield ripped up. Oh, we had that nice rally. Well, the yield got faded, and then it started to put in this 5. So we've really ripped off this wave 5 that we've been projecting. This chart is, you guys have seen this chart if you're following me on Twitter, if you're a member. I've been updating you guys on this, and it's just working out, right? So now, taking that into account, let's get over here to this chart. If we finish in one of, and I only halfway showed this because I wasn't really trying to hide it, but that's why, again, talking about what I was saying earlier, why I leave some things off that I don't show you the perspective, because I don't think it's important to you at the message at the time. This is one of the things that wasn't really important to the message at the time. Yeah, I do have that as a 2, but that's not important to the message at this moment. So we won't talk about that because we have finished an impulse that has taken us from let's see, we'll call it the 4th of August in 2021 to, we don't even have to say the top is in. This can continue on, right? It's just showing that it is in the area where it is likely to be finishing. And of course, you know, all the TV people and air quote smart people say that the bond market is where the smart money plays. Oh, look at that. Perfect wave 5 projection from a Fibonacci standpoint. I know you guys love that, even though I think it's highly overrated, even though it's quite important, but neither here nor there. See, and when I say things like that, people are like, well, you don't even use fibs. No, I do. Just, I don't want you to overvalue them or even undervalue them, but I want you to see the whole theory, because so many people just get caught up in, oh, I'm looking at this, that, and the other, but I'm trying to teach you everything, all parts of it, so that you can consider them all simultaneously while you're looking at counts, and you can just throw away these shit counts that I get people telling me about because you're thinking about everything. Okay, or at least you're thinking about everything, and then you can you know, have conjecture with me. I love talking to guys that know the whole theory. Anyway, yeah, so if this is finishing over a year, about a year, we'll call it a year-long motive wave, impulse wave, well, then we're probably going to correct off of that for at least a few months, right? At least a few months, maybe a year, if we're going to get similar. So let's go ahead and zoom out just a hair. If we're calling this a 1, it's ugly. I don't even want to bother counting this. But if we're calling this a 1, 2, 3, 4, 5, that's what I would expect. How long will it take us to get to this 4? Well, what we would want to do, and again, the top might not even be in yet. So we're not calling top here. It's definitely got all the, at this perspective, because we're not zoomed in, picking, I love when people are way zoomed out and they're trying to like hit a bullseye on an anthill. Anyway, this could continue up, but when it does start to retrace, what we're going to do, we're going to do the same thing we always do. We're just going to draw a temporary channel, and this would be our minimum price expectation. I would think that based on the way everything is set up here, we should, and this is considering, and this would be if, whenever, and this was what I was, we haven't gotten to that chart yet. So, but a 3-wave move, a finished 3-wave move, even if the 3rd wave is extended, should not be, and this is why one thing that gets me too about folks that say they love 5th wave trades the most. I have to, Jeffrey Kennedy said that. And I've heard a lot of people try to parrot that and said that, that's theirs because I'm sure they're copying Kennedy, but I don't understand that one personally. I mean, the way he sets it up, it's nice. That's the way I trade them. But it's just not the best. Anyway, because anytime you see an extended 3rd wave, you could still potentially have a completed zigzag, right? Because you have a completed pattern, which means if you're wrong, I'm getting too far off topic, but let's just say it's suboptimal. So we don't want to sleep on the fact that this could be A, B, C. Never will. But likely it's a 3, but we're going to retrace here. I would think bare minimum once it starts a couple months at least. Now that may not jive up exactly with this being the 2 finishing up here and 3 forever, but as long as I get this right, we can reassess over here later, right? See if there's anything more to say about that. Yeah, I mean, I think that I think it's going to be more than a couple months, probably, just based on scale. Let's just say if it goes to here, this would feel roughly. Well, let's just say it's going to be double this wave 4. Let's even just say double that wave 4, which doesn't feel no. Let's just say it's going to be the same as this wave 2. How about that? So that was here. Let's just put our little date range. 133 days. So how many months is that? 4, 5, 6. 3 is 90. So we'll call it 5 months. Sort of bare minimum safe, right? Or this idea is wrong and we're ripping down to the downside. That being said as well, most investments, and this is not financial advice, but we talk about trading here, but if you think about longer term moves with investment accounts, maybe retirement accounts, personally, I've been in a lot of cash since probably a little early in 2021, but completely out of bonds. Now I think there's potentially the time to buy a bond, because again, this is the yields, and I guess this video is already almost 20 minutes, so I don't want to get too far into it, but the yield is inversely correlated to the price, and the price is set after. So if I buy a bond, say my neighbor wants to sell me a bond, once I buy that bond, then it's got a price on the market, right? Because I buy it for whatever they sell it to me for, as far as you give me $100 and in a year you'll make $5 back. So that's my coupon rate. So it's worth that. It's worth 105 when I buy it, no matter what. But if I want to sell it after, that's where the market comes into play. So the yield, and we'll just, I guess really quickly, the yield goes up, meaning that the interest rate. So my other neighbor in a week will say, well, I'll sell you I'll give you a $100 bond and I'll give you $10 in a year. Okay, so the yield has gone up. So that bond that I bought from my other neighbor last week, its value automatically decreases because I could just spend the money with the other neighbor to get more, a higher yield. So that's why it's an inverse correlation. Which means if you're going to buy a fund, a retirement account or something that's buying bonds, the price has been going down because the yields have been going up. If these are going to be going down now, I don't give you financial advice, but something to consider. Let's see. And okay, so in general, what does that mean? Well, dude, the DXY is going away. I don't really care about the DXY in regards to what we're talking about here, about my investments, because, the DXY is going up. It's crushing the S&P. It's crushing Bitcoin. No, it's not. It's not. It's going up against other shit fiat currencies. I don't want to get into fundamentals, but I could go on for quite a long time. But everybody, that's a far more, let's just say, I know I'm out of my depth in that regard, so I don't have nearly enough information to try and share with you guys. But, maybe if we were sitting on my back deck with a whiskey and a tumbler and a couple cigars, we could talk about it. But let's just say I don't care what the Dixie is doing in regards to what we're talking about in this video. Of course, it's important, but I really don't think the Dixie's nearly as relevant as folks think it is for what they think it's relevant for, personally. All right, well, I think that that gives you my macro perspective. Not saying anything about the economy, not saying anything about anything else other than I'm getting ready to buy some shit. I think bonds are going to be a good buy now. I think the stock market's going to be a good buy soon. What's going to cause that to happen? I don't know. I just do technical analysis, boys. I'm not a doctor. I just play one on TV. All right, toot out.